Just if at all I say that, say A is an important question, B is moderate question, and C is less important question, then in my opinion it is like this. The first question is only to introduce the concept of the return. Return can be negative also. Based on the past performance, you anticipate the future performance. Based on the past perform, sorry, you assign the probability for the future performance to make the calculation of the anticipation of the performance. It was a player, then that is applicable for a security. Calculation of the return and risk standard deviation using the past prices, taking into account the future expectation about the price and the dividend, the relationship between the standard deviation and mean, calculation of the mean return and the probability distribution return. Different outcomes are possible and based on that return. Same kind of example. This is like an important question in which we understand that it's a calculation of the return of the portfolio, we calculation of the standard deviation of the portfolio using Markowitz model. This is an important question in my opinion. You form a portfolio, and for that, say you compute the standard deviation. You are provided with a specific information that say how you are going to uh, form the portfolio so that you get a specific return. This is a question wherein say more than two securities are there, three securities. Not so important. You just have to be careful for forming the portfolio formula, because for return it is simple weighted average, and for variance you have to consider xy, xz, and yz. A small formula just to understand that, say when you invest in two securities and one of them is RF, then the security which has a standard deviation, taking that only into account, you have to compute the risk. And if investment is made into securities having perfect positive relationship, then standard deviation is simple weighted average. You do not get the advantage of the diversification. This is an important question wherein I try to explain the significance of R. Very simple questions. Same risk, more return. Less risk, more return. Same return, lower risk. This is something which is important. With the increase in risk, return increases. So you have to make investment as per the risk bearing capacity. Then again, similar type of examples are there. Same risk, different return. Identifying of the inefficient portfolios. It's good to some extent, not great. Markowitz model theory, that's really important. Efficient frontier. This is a good question, especially because of the information about the bonus debentures provided to us. That's a good question. Risk-free rate of return, it does not have standard deviation. This is again a very good question, wherein we understand that, say you make investment in two securities and one of them is RF. How to make the calculation of the return and risk? You borrow, then in that case, say how the weights will be formed and the return to be calculated. This is again important. Markowitz with risk-free security. This is an important diagram. This is the introduction of the Sharpe ratio, return risk trade-off. That is what we have. This is a practice question, that is of the efficient portfolio. Again, it is a practice question for, that is say specific portfolios that they have provided. This is just understanding that, so the correlation coefficient is 1, then standard deviation is simple weighted average. Calculation of the return is slightly important because the dividend and price change information is given. This is moderate because what happens at SEDA, we have been provided with the term variance, that is, and over here the standard deviation is given. So they have taken later on the standard deviation in doing answer. In this question, the correlation coefficient is negative because, however, because of this, like the economic situation which is going to change, because of that, so the correlation coefficient will be positive and advantage of the diversification will be lost. This is the minimum variance portfolio introduction. It's practice question. This is a summary of all kind of examples. R is 1, R is 0, R is positive 1. So this is a very good question. Summary of all type of questions that we have done. Not something which is very difficult theory, but of course important, because what happens at say the frequency with which you revise these theories are very less. That is the reason that this is important. Again, this is like to some extent important. It is buy and hold strategy. So we need to refer it at least for once before examination. Otherwise, we may be lost because we will not have any idea that say how these theories are performing. CAPM, of course, very important. Calculation of the beta, initial question, so it is important. Market portfolio is very simple, that is beta is 1. Risk-free security beta is 0. Introduction of alpha. Simple decision making, alpha once again. In this question, only RF calculation is important in my opinion, except that everything is 0. That is say simple. Beta of the portfolio, this is important. Rest of the portion very simple. This is only a practice question. Just be careful that so the beta will be calculated using the weight in the proportion of the amount. This is what's the kind of reshuffling of the portfolio that you are going to do. Next is the calculation of the RF and RM by preparing two simultaneous equations. Only identifying the given returns are based on the past experience or it is based on the CAPM. New formula, percentage change in RJ divided by percentage change in RM. In my opinion, this is the important question, except that everything is simple. Simple question, practice only. Over here, the calculation of the RF is important, except that it is simple. Markowitz model, the required rate of return formula. Markowitz model. Because after understanding the CAPM, learning that formula becomes simple. That is the reason I have kept it later on. Practice question. Again, simple application of the theory. Just revising the formulas of the beta. This is very important for, that is a question. Again, very important question. Dividend yield, that is only a formula which I wanted to explain. This is important one, especially the calculation of the RM. Just be focused in understanding the RM calculation. Remaining things are not so difficult. For beta calculation, again we have the simple formulas to be applied. Percentage change in RJ, percentage change in RM. A simple question, only for practice. This is valuation of the security, so it is an important one. Again, valuation of the security with the change in the factor, so again it is an important one. This is a practice question. This is very important question. Bifurcation of the total risk into systematic and unsystematic. This is a practice question. This is again a very important question, especially calculation of the risk using the Sharpe index method. This is a practice question. However, if possible, you try to do this question, because the way the variance is provided to us, the way the covariance have been provided to us is a unique way. Unless you have gone through it properly, it is difficult for anybody to do it in examination. Again, this is a practice question, but still it is a very good question. Very good question. Number of concepts will be revised. This is again an important question because of certain special treatments that say they have, that is say provided over here for doing answer. This is above average question, not very simple, neither very difficult. This is a question wherein trainers ratio have been introduced. Practice of the trainers ratio and the Sharpe ratio. This is a very good question. Application of the trainers ratio, Sharpe ratio, and based on that, say we are making the calculation that what will be the change in the return. Again, it is a practice question, but just see that say all the securities are having negative answers. So surprising, but asked in recent examination, so I have included it. And sometimes so surprising answers that we have, that in examination it becomes difficult for us to write those answers. But underlying factor is just remain clear with the concept and you write answer accordingly. This is an important question, of course very difficult for anybody to solve, but be careful that say how the solution is made by them. That is, in terms of the beta they have done the average, in terms of the RF they have done average. So just be clear that say these kind of the working that say they have made. The beta of the market portfolio is taken directly one for the purpose of doing answer, which is very much correct. And then so the ratios are calculated. Again, security market line, so you draw a diagram. So understanding of the question is important in my opinion. That is, you have to compute RF, you have to compute RM, like that. This is very important concept. It is covered in your mergers and acquisitions also. That is beta of unlevered firm, beta of equity. Then this is also an important market risk premium and risk premium of the security. This is a simple question, only a practice one. Simple practice question. In my opinion, say over here, this part of the question is important. Except that everything is not so difficult. Practice question. This is an important question. Why? Because the tax information is introduced now. This is a practice question, but yet it is important. This is a very simple question, but make sure that you revise it before examination, because directly the risk adjusted index is given. This is very important question. Wherein information is given that say we are doing more than one business. This is introduction of the APT. This is an important question of APT, not number of questions are there. So whatever the questions are there, that so you just need to go through at least for once. You may not be doing it. This is only explaining the short position in the cash market, which we cover in detail in our simple chapter of derivative. but just I wanted to explain a few questions based on that, so I've included it. This is really an important question. Both questions are important. This is again an important question, very lengthy question. So just you have to understand that's the way they have provided the answer. So how they make the computation of the answer, you just need to go through it once. Doing that kind of answer is very difficult. Introduction of a new concept called characteristic light. This is the difference between both of them. Simple moving average, not very important, but you need to go through it properly. Exponential moving average, that is important. Asked in May 19 for 8 marks. Again asked in May 18 for 8 marks. So for 2 times it has been asked in examination. And in old syllabus also it has been asked. But definitely an important concept. Autocorrelation test. That is what we have. This is important. At least you have to go through it properly from examination point of view, because it should not happen that say you are completely unaware of this. Uninterrupted sequence of the price change. That is an important one. Run test. Again, it is an important one. Again, uninterrupted price change, population data. This is what we understand is a test for semi-strong for market efficiency. Only one questions I have kept. Only one question. So you need to go through it at least. You may not be doing it. This is again important. Only one question of the concept called cutoff point. This is again an important point. That is, say the 3 portfolios are there, and we are required to calculate the minimum variance third portfolio. It is also given a name as a concept of the corner portfolio. That is also the name that it is given to it. This is arbitrage. Only one question is there, an important one. We have discussed that, say how to make the calculation of arbitrage. This is what we have.